Expectations continue to grow that the Federal Reserve's first interest rate cut in more than 4 years could come as soon as September. If the Fed cuts rates, it couldn't come soon enough for America's corporations, which right now are navigating the worst environment for bankruptcies since the financial crisis. Before we begin, remember to like this video and subscribe for more economic updates. Through the month of June, there were 346 corporate bankruptcy filings. That's the most recorded for the first 6 months of any year going back to 2010, when the nation was still dealing with its fallout from the global financial crisis. There were 75 such filings in June alone, suggesting the pace may be accelerating as the year continues. In a statement, S&P Global Market Intelligence, which generated the data, said, "High interest rates, supply chain issues, and slowing consumer spending continue to weigh on struggling companies." Also worth noting is that 2023, which saw 19 fewer bankruptcy filings through the same January to June period, went to finish the year with a total of 635 filings, the most since the financial crisis, and now 2024 is on pace to exceed that total. Most of the companies that have filed bankruptcy this year represent the consumer discretionary sector. Think about things that you don't necessarily have to have, like hotels or a new car or restaurants, which makes sense when you're cutting back. In June, the Institute for Supply Management Purchasing Managers Index for the services sector fell to a measure of 48.8. Outside of the months associated with the depths of the global health crisis, that's the lowest reading for the index since December 2009, when the direct impacts of the financial crisis were still resonating throughout the economy. Also in June, the National Federation of Independent Business Small Business Optimism Index, which gauges sentiment among the nation's small business owners, came in below its historical average for the 30th month in a row. In a statement, NFIB Chief Economist Bill Dunkelberg said, "Main Street remains pessimistic about the economy for the balance of the year. Increasing compensation costs has led to higher prices all around. Meanwhile, no relief from inflation is in sight for small business owners as they prepare for the uncertain months ahead." Often, I like to review what we've gone over in videos in the past, which is that businesses have been reporting that one of their biggest obstacles is inflation. Now we're seeing this play out in the number of bankruptcies being filed. We don't know what the Federal Reserve will do in September, but we do know that the economy is facing higher and higher stress, which is leading to economic uncertainty, which is one of the drivers of gold.